Happy Friday, everyone. Just a quick market recap for the past week that we've seen both in the United States as well as Canada, and somewhat of a similar picture in the sense that both markets took a bit of a breather following major rallies last week. Let's start with the TSX. It was up by 2.6% last week, but essentially flat this week. In terms of the sector performance, best performance was really in communication services. That follows the announcement that Rogers is going to be buying Shaw. It's a $26 billion deal. And was a 70% premium to Shaw's closing price prior to the deal being announced. So very strong for Shaw shareholders for sure. We also saw some nice strength in consumer discretionary, really driven by restaurant brands. Some positive news there as it relates to their expansion with the Popeyes franchise into Mexico. Of course, Restaurant Brands is the owner of Tim Hortons as well as Burger King. We did also see some continued moves into financial shares today, of course, benefiting from a higher interest rate environment, although that is not what we're hearing from the central bankers, but the bond market is moving ahead of the central bankers, increasing that yield curve, that U.S. 10-year yield moving past that moving through that 1.75% level. Away from that, we did see some softness in energy shares this week, or perhaps just a little bit of a breather. That on the back of WTI down by 6.1%, the worst performance we've seen for the price of WTI since the October time period. However, Goldman Sachs is out saying that look, this is not a correction. This is just a break from a huge rally that we've seen in the price of WTI and also, of course, those stocks. I would encourage you to listen to my interview with Joe Rabel. I taped it with him today. It'll be coming out tomorrow. He's a technical analyst. And we reviewed, of course, a number of stocks, but also commodities. And he would echo the same comments that Goldman provided, and also, gives a bit of a range in terms of where he sees WTI trading. Gold was actually up by 1.2% on the week. It's actually trading at a 3-week high. That on the back of dovish comments from the U.S. Federal Reserve, investors saying, hey, I want a bit of an inflation hedge. So they're buying back into the gold trade. At the same time, though, the U.S. dollar shrugged off those dovish comments from the Federal Reserve and was up versus most major currencies, including the Canadian dollar. When we think about the U.S. markets as well, mostly lower for the past week. Dow down by about 0.5 percentage point, S&P down by 0.77%, the NASDAQ also down, and the Russell 2000, so the small cap index, was down by close to 3% on the back of a huge rally, which caused Morgan Stanley as well as U.S. Bancorp. I think it was UBS to downgrade the space. Just call it Morgan Stanley for now, downgrading the space. So that put a little bit of pressure, and of course, maybe just some profit taking there. Tech, of course, lagged, and that's the sector that continues to get caught up in the U.S. 10-year yield debate and whether or not rising inflation expectations are going to put downward pressure on those tech shares. That's still getting pushed and pulled day by day throughout this past week. I think that it comes down to, again, being a stock picker and that this is a stock picker's market. Away from that, of course, the U.S. Federal Reserve did have their 2-day meeting this week and came out with an increase in the growth expectations for 2021 to 6.5%, no change for 2022 or 2023. And still no expectations that we'll see rates increase, at least from the U.S. Federal Reserve, that overnight rate, in 2023. So in other words, it was dovish. It was lower for longer in terms of the interest rate environment. But whether or not the market is going to continue to believe that is the key question for where you want to be invested in the market. That's something we're going to continue to talk about. And of course, people have different views, and that's why you're seeing this push and the pull in the market. What was also front and center for many investors is taking a look at the reopening headlines. Some of the comments certainly helped the airline stocks. UAL was up by 8%. JP Morgan had a conference this week, and the companies and a number of airlines are noting that they are seeing some improving trends. So airlines are one area to watch. Also AMC theaters, that was up by 24% this week. 99% of their theaters will be opened by next week. So a couple of key stocks to watch there for sure in terms of that reopening trade. And also importantly as well, another thing that you got to keep your eyes on is what's going on in the supply chain. There have been supply chain constraints. That has put some chip constraints impacting the auto industry. Samsung was actually out saying that could spill over into tech. So I don't know. If there's things you need to get or buy, take a look at it now. I think people have really noticed that as it relates to buying snowmobiles, at least here in Canada, and even some boats for the summer. So anyway, have a great, safe weekend. Joe Rabel's interview will be out tomorrow on the technical analyst front, and I encourage you to watch it. You'll get a number of good stock ideas. I'll leave it there.